to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon. And today we're going to have a weekly strategy roundtable where we talk about current market conditions and any questions you might have about your subscription. For those of you who are new, welcome. This is my brief bio. Again, my background is technology. I have a master's degree in computer science, specializing in artificial intelligence, statistics. That's my passion. I worked as an investor and CTO of many startups here in Chicago. So that's my background. I want to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing it for over 15 years. Disclosures are very important. I'm going to go through specific trade ideas, so please look at the disclosures. If you need to trade in stock or options, I encourage you to visit optionsclearing.com so you understand the risk associated with trading stock and options. And I'm going to pause the screen here for a second so you can read the disclosures. And you can always pause the screen so if you need more time to read the disclosures. But I'm not a financial advisor. I'm not registered with FINRA, nor SEC. I'm here to show you what I do in my own account based on my own risk tolerance level. You should not assume that the future trade picks will be profitable. All right, let's talk about current market conditions. A lot has happened. This week. So main news are basically our interest rates, right? So interest rates, first we had a Fitch downgrade of US debt similar to 2011, right? And the 10-year yield basically retesting October highs, right? Basically retesting October highs. What does it mean? Back in October highs, this was the bottom of the market, right? When the yield went up, market significantly sold off, right? In October and December, it reached kind of a main point. Then yield started to drop, right? In November, market rallied. In December, we had pretty sharp pullback. Now rates are going up, and we're basically almost at all-time high. Right, we're almost all time. So on one hand, it could be a fear of inflation, right? That higher for longer, especially as better than economic data came in, jolts came in better than expected, market dropped again. Initial claims came in better than expected, market drop. Right now, initial claims came in again, not initial, but unemployment data. We had unemployment data came in better than expected, and technology continues to rally. And then dollar, right? Another strong price action we have in the dollar. All right, we had a pretty sharp rally in the past with the yield, right? Sharp rally, we broke through 50-day moving average. We're on the way to 200-day moving average today. I guess unemployment data came in maybe a little bit worse than expected, right? The idea was to create creation of 200,000 jobs, but only 178,000 jobs were created. So, so it came in a little bit worse than expected, but at least it wasn't a home run like last month. So yields did pull back significantly, right? Yields did pull back significantly. The dollar dropped, and technology is trying to find a footing around 50-day moving average, right? We broke through this line for the past 2 weeks lows, and we are trying to defend June high, right? This is the previous rally, which has failed, pulled back, and then we broke through it end of July, right? So June high is a line in the sand. We've been retesting it several times. And right now, market kind of trying to find the direction, right? It's going between these lines, right? Failed overhead resistance for past couple of days. We did break through it, almost close, get to the session high from the first wave of sell-off after the jolts data, right, on Wednesday, and kind of pull back. Any questions so far? So the next main event, technology, right? So we are pretty much more than 50, I think 60% of companies announce earnings. You do have kind of a mixed bag. You know, on one hand, you have company like Amazon hit a home run and doing a catch-up trade. So one of the themes that I have noticed, and you know, a lot of analysts have noticed, is that companies that have been underperforming, like Amazon, and that have reported better than expected earnings, right? It looks like cloud computing stabilized slightly better than expected. They get rewarded, right? Up 10%. Same theme was Meta, right? Companies that haven't reached all-time high, or in case of Amazon, 50% retracement, they're getting rewarded, and Meta, Google, and Amazon continue to rally. Main reason, probably catch-up trade, right? It's still not at all-time high. So you do have a catch-up trade in these names. On the other hand, the leaders of the previous rally, like Apple, right, had a sharp pullback, right? And Apple basically retesting the breakout level of all-time high back to the back to the high point of the last bull market, right? So we ended 21 at 183. This is exactly where we have been today, right? So bulls and bears tug of war in terms of, is this the confirmed breakout, right? We've spent 1, 2, 3, 4, 5, 6 weeks above the breakout level. Now we're testing to the downside, and we did break, Apple did break the downtrend, right? Significant sharp break on the earnings, worse than expected earnings. Again, slowdown in iPhone sales in terms of the revenue, and potentially weaker consumer. So there is a break of the uptrend. So best case scenario, you know, bulls might step in, but decisive break to the downside. You can see same kind of setup in Microsoft, right? We had a sharp rally on better than expected announcement of, you know, increase in their monthly charges to the enterprise users, and we had a sharp rally that broke through again the highs of the previous bull market, and now we have a sharp retracement where we have maybe marginal lows in the past 8 weeks. So Microsoft, Apple is the opposite. The companies that were extremely overbought, like same categories, TSM, pulling back, and AMD, right? Sharp pullbacks, all sitting on the key support level. So what's next, right? I mean, 1 week doesn't set the trend, right? We had a red candlestick probably since March, right? Since the initial pullback from the Silver Valley Bank liquidity issues, right? In regional bank, we did have a sharp pullback to 380 level back in March, and then since then we really haven't had major pullback or more than one red candlestick, right? Maybe 2 red candlestick, but slightly lower. So I think that's the next. So that's the next question. What is the catalyst? In terms of earnings, I don't think there'll be any catalyst from earnings. Now we have a clear picture. Some companies are better than expected, right? Like Caterpillar, right? Where, you know, companies continue to make higher, right? So some of the industrials, some of the energy name like Schlumberger continues to trade higher. So you have rotation into some of the cyclical names, some of the mega cap doing the catch up, and some of the outperformers, you know, being sell off. So what's next, right? Personally, I mean, it's too early to tell, right? We did, I think the next, we were talking about different levels. So as long we're kind of on the spiders, we're fighting for 451 level, right? So for the past couple of weeks, right, that's been the line in the sand. If you were in a live trading room, we've been talking about this level, and we decisively broke below that level and still staying below 452. The next level will be 444, right? 444 is going back to the beginning of July. So 2 months, very key support level. So from my perspective, as long as we are trading above 444, you can't really say that this is the top, right? The question is this the top? Right? That's always been a question. And so far, it's, you know, every time I try to call a top, you know, Renata basically say, well, no, stock continues to go higher, right? So then the question becomes, is this the top now, right? You know. From my perspective, you probably don't know until we retest and break 444. So if we do break 444, which I think we will, right? It's not a question of when. I think it's just a question of if. It's just a question of when. Maybe it's next week, maybe it's end of August, maybe it's, you know, beginning of September. Hard to tell, right? It does look like a pretty bearish pattern, right? Usually it's A, right? We're retracing B, right? Maybe we marginally go through higher, but then is there a wave C, right? That's usually how, you know, not usually, but if you believe in Elliott waves and, you know, after sharp pullback, rebound, and then continue going lower. So I still think there is a wave C, but it has to break through 444, kind of decisively like here. So if it does break below, then you know that this is the top, right? And the pressure is to the downside. As long as we're staying above 444, potentially you could still revisit or even make marginal new highs, right? Obviously, this is not what I don't think this will happen, but you know, I recognize that it's possible, right? I recognize that it's possible. Everybody is extremely bullish, even though a lot of bulls are now turning kind of more cautious, right? If you turn on Bloomberg, CNBC, and you listen to contributors, people who were extremely bullish in the beginning of the year, they were right, but now they're turning more cautious, right? They're basically saying, what's the next catalyst? We're entering, you know, August, September, October, usually not from seasonality point of view, not the best time to invest. So that's the question, right? That's the question. So personally, I think the risk is to the downside. I think it's just a matter of time to break through 444, and then bears would be in control, right? And then at least we know that we're probably trading in this channel, which is probably what's going to happen, right? So we broke above this level, right? We broke above this level, the downward channel since October lows, right? And then if we drop below 444, below 50-day moving average, then we are trading between this channel, right? So that's my opinion, right? I think something like this, break below 50-day moving average, back to the channel, and then, you know, we're trading in the channel, at least for the next couple of months. So that's my kind of core scenario. I do recognize that potentially we could overshoot 460. Just depends on the next week what the price action is. Any questions? So again, usually, you know, market can really, if you talk about indexes, individual stocks, definitely, but if you talk about indexes, Apple is one of the largest contributor to technology, largest contributor to Spider. So where Apple is going to go is where the market is going to go, right? And Apple is trading below 50-day moving average. That's considered to be a bearish pattern. It broke through this level. You know, we'll see. I mean, potentially next week, it will try to close the gap. We have seen rallies in AMD, let's say, right? Initial reaction was positive, then drop, and it almost recovered all the losses, right? So you could have similar price action in Apple, but the longer it stays below 50-day moving average, the higher the likelihood that, there's really no support till probably 168, right, till the March highs. So we could have sharp pullback in Apple, and and that's the second largest company is Microsoft, right? It's also sitting at this. It's been trading below 50-day moving average already for a couple of weeks. Nobody's stepping in. That's also a problem, right? So if Apple and Microsoft continues to deteriorate, then I think you're gonna have bigger pullback. Any questions? Mark, thank you. A minus soft landing, hard landing. I still think that there is, I'm bearish on the market, so I still think there is a recession, right? And it seems like, most contributors, and that was the consensus, right? Most people, I mean, in the beginning of the year, people were divided in two camps. We're gonna have bad first 6 months, right? Bearish 6 months, and then a great second half of the year. That was my camp, right? With the assumption that there won't be any kind of black swan events, right? Bears were wrong, I was wrong. Again, why? Main reason is because there was no signs of recession, inflation continues to go down, but the biggest contributor is this AI, right? Generative AI, with the idea it's gonna change the world. This is equivalent of cars, airplanes in the beginning of last century, maybe air conditioning, right? Or, cable. Millions of jobs gonna get created, improvement in productivity and blah, 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 blah. And then the market rallies, right? So now most people are kind of flip-flop their positions, right? People who were bearish basically say, well, and I think that's the consensus actually. I think right now the consensus is the first 6 months were the best 6 months on record, right? I think, or in the past, whatever, 60 years, we had the best first 6 months of the year. The next 6 months are gonna be not as good, right? Nobody's saying that we're just gonna elevator up, elevator down, but significant pullback down, right? So even the bulls are now becoming more cautious, right? A lot of people have target on S&P for 4,600, and a lot of them are not raising. I mean, there are some people that raise to 5,000, but at least majority of people that I follow and listen, they basically say, we called 4,600 end of the year, we're already at 4,600, then little room to the upside, more room to the downside. Now it doesn't make sense to chase, right? It doesn't make sense to chase. What's the next catalyst? So I think that's my opinion, right? I was wrong that the first 6 would be bad and second would be good. And now I think the first 6 months were great, and the next 6 months are going to be, the risk to the downside. All right, any questions? VIX, yeah, so VIX definitely, we had a sharp rebound, right? Sharp rally, more than in July. As of right now, it's pulling back, right? It's pulling back. So again, I think the issue is Apple, right? Apple and Microsoft, right? And Google, and you can look at the Google chart. It pulled back with the market. Same thing. It kind of broke through. Where's the Google? I mean, it didn't get to the 21 highs, right? Google is underperformer, but you can see it's not really continue. It's not really continue to rally, right? And I would same thing. You can see from March strong uptrend. I would watch this line, right? If we break below this line, then bulls are, bulls will be in trouble. But VIX, we do have kind of sharp jump. The question is, I think at least my theory, and a lot of people actually do not. Well, I haven't heard that explanation, but we did have a Fitch downgrade. Most people just dismissed it, right? They dismissed it, basically said, well, nothing's going to change. We had it in 2011. And it's true, we had it in 2011. We did have a sharp pullback in 2011, right? The idea was the downgrade happened in April of 2011, right? It happened in April 2011, market went up, went down, went up, nothing big happened. But then 4 months later, we did have a sharp pullback, because there were issues with sovereign debt, right? Greece, Italy, Portugal, the yields went through the roof, right? And potentially that's another explanation what's happening now, right? I mean, at least based on the yield, based on the sharp move in the yield, right, we retest in October, some people say people are concerned with inflation. I think some people say they're concerned with sovereign debt. Because if you look at the yield in Italy, Greece, it's going through the roof, right? It's not breaking out, but it's, vertical move to the upside and kind of the line in the sand. So if in the next couple of weeks we do see yield in Germany, Italy, Greece breaking through this level, maybe now, maybe in a couple months, maybe there are, the fear is that, governments carry a very large debt, including the United States, right? Somebody's posted $10 billion a day of extra payments as a result of the high interest rate, which is a lot, right? Every single day, US government has to pay, I think, $6 billion of extra payments, right? And since there's no end of sight when the rates are going to go down, how long can all these governments print money, right? At some point, so, I would watch the interest rate, right? And Bill Ackman came out yesterday and he said, again, he did it during COVID, now he's doing it now. Armageddon is coming, what did he say? 30-year is going to 5%, 5.5%. If he's right, 30 years going to 5.5%, either inflation has to come back, right, which there's no signs of that, or there are issues with sovereign debt, that at some point, in the near future, there would be, the governments will not be able to carry debt. So keeping an eye on yield is extremely important. So far, it's, today it broke below, right, because perception that a little bit better unemployment data, a little worse than expected unemployment data, so rates are dropping. Next week, we'll see, do we have a breakout to the upside or do we have a fall? So today, dollar drop, rates drop, and that's bullish for the market, and QQQ is trading in the range, right? QQQ is still trading in the range. Okay. Thank you, Renata. TJ, thank you. Japan intervention, right? The packing, allowing interest rates to go up. In Japan, again, they're dealing with inflation, but still, I think they said it can go to 1%, but no higher. So it does influence interest rates, but I think the bigger issue is Europe in the United States. Japan also has an effect, right? It's also the third largest economy in the world. So it does matter. VIX is going up. No, VIX going in the opposite, right? So VIX is the measure of volatility, right? How many people buying spiders puts. So when the market sold off, we had a pretty sharp rally in the VIX, and now it's pulling back because QQQ is recovering, right? So that's the setup. Rotation to banks are, higher rates, especially longer dated rates, are good for banks. That's why you see JP Morgan, originally sell off, but now close the gap. And same thing with KREs, originally sold off and now close the gap. Because regional banks and mega banks, they do benefit in rise in interest rates, right? We have steepening of the yield curve. I mean, it's still inverted, but the difference between 2 and 10 was 100 basis points for many months. Now it's 70 basis points. It's still not a very healthy, yield curve, and usually a sign of distress. But you see that the delta is changing, right? It was, I think, at some point 110 basis points. Now it's at 70, right? So, and that's good for the banks, right? The higher the 10, the lower the 2. That's good for the banks. Thank you, TJ. Any other questions? So how do we? So next week. Again, it's at this point, I think it's all about macroeconomic data, right? If economic data comes in better than expected, right? Unemployment data, PMI data, ISM data, the market might sell off, right? Higher for longer. If data comes in worse than expected, then the idea that the Fed will start lowering interest rates and market will rebound. So I think that's the paradigm we trade. In terms of core CPI, the idea that CPI has to come in better than expected, right? And it's core CPI year over year is at 3 and core CPI at 4.8. So these numbers have to continue to improve. If they continue to improve, market will rally. If they reverse, right, and all of a sudden come in worse than expected, yes, then the rally in yield will continue and the market will continue to sell off. Any other questions? All right, so what are the strategies that we utilize at Tradespoon? We do have a lead circle. You can look at trader's log. So every time I trade, you can actually see my trades. So what do we do in the last 7 days? So you have a combination of different trades. One is a square. So sell and premium. We're still in the middle of the earnings season. Still 40% of S&P. Every week there are earnings. There is only 1 week in the quarter where there are no notable earnings. The rest of the weeks, it's sometimes more, sometimes less. So selling premium, right? Especially if you think that the market is overbought and it's going to trade sideways, you want to utilize market neutral strategies, whether it's cover call, whether it's a spread, iron condors, just based on your experience or what you prefer to trade. Butterflies, I know people do butterflies. So I did sell 86 call. I didn't say a put because I was concerned about square earnings. They actually did come in worse than expected. So it's good that I didn't sell the puts. Otherwise, I would have to defend this trade at this time. But I did sell the calls. Right, 24 cents. Usually between puts and calls, I'm looking for 0.5% gain. So this time I only sold calls. Sometimes I do directional trades like IWM. I'm trying to close IWM. Right? And IWM, same price pattern at sitting at the key support. Right? It briefly retested last week low around 193.3. It has rebounded, right? Has week rebounded. I think we'll have a retest of this level in the next couple of weeks again. So IWM is overbought. I'm still bearish on IWM. So directional trades using spreads. Same thing XLF. And now, if you are considering hedging, if you think the market can continue to sell off, I did added to my QQQ positions. I sold short QQQ, right? Either the stock or buy a put, out of the money put, 345, right? I think by end of September, or I think we could get close to 345, right? Especially if this level doesn't hold next week, if we're gonna retest this level again and break through this level, like Apple, right? So it's not even QQQ chart, it's Apple and Microsoft chart, right? So if Apple continues to trade below 50-day moving average, right, next week, and Microsoft continues to trade below 50-day moving average, then we're gonna have a sharp pullback, probably approaching somewhere to 200-day moving average. So for that reason, I would be a conservative, maybe build market neutral portfolio right now. So one way to hedge is, buy a put. This comes to risk management, right? I'm buying a put because, okay, worst case scenario, I'm wrong and the market continues to rally or even sideways. Then I'm down on one contract, it's $250, right? So the idea is not to risk more than 2.5% of your portfolio. Average account is $10,000. So $10,000, $250. Same thing, if you're not comfortable trading options, you can trade stock, right? If you sell short 373, you have to decide how many shares, right? If you buy 100 shares or sell short 100 shares of QQQ, 2.5% would be $2.50. So if it moves $2.50, you basically have to exit the position. So maybe 100 shares is 37,000. That's a lot, right? On a $10,000 account, you probably don't want to sell, 100 shares. Maybe 30 shares, maybe 15 shares, right? Always trade the same amount On a $10,000 portfolio, maybe you never invest more than $2,000 per trade. So then you would have to buy 5 shares of QQQ, right, or 6 shares of QQQ. So deciding the quantity and risk management and position size is extremely important. So you can always see my orders position. You can enter phone number and get SMS message and SMS alerts. And you can participate live in trading. The most important is to watch the recordings or participate live, because every day I do review every single trade, right? I go over every single trade to make sure you understand how to do risk management, right? Because the most common mistake we all make, number one mistake is position size, right? I have tickets almost every day or at least once a week. Vlad, I bought 20 contracts of QQQ. What do? Right? I bought 20 contracts of 345 put. It went from $2.59 to $1.94. What do? Well, 20 contracts of $345 stock, what is it? $700,000, right? You're managing $700,000 on a $10,000 portfolio. So you're over leveraged, right? I mean, it's very hard to defend your positions if you have an account with $10,000 and you trade in $500,000 worth of equity by leveraging, by using options, right? That options were not created to create a huge leverage. They're allowing you to do this, and you can do this. But if you're down 60 cents on $20,000, you're down already $1,200. You're on $10,000 portfolio. You have to exit the position, right? Because you're already down 12% on one position. So position size is extremely important, right? And maybe for some reason, some people it's appropriate to buy one contract. My idea is that on the $10,000 portfolio, you don't buy options over $100, right? Because one contract is already $10,000, right? So you either buy option spreads, but that's usually my rule, right? And I encourage you to follow something similar, right? So if you have $10,000 per portfolio, you only trade one contract and only of $100 or less stocks. If it's a $50 stock, right? Okay, fine. You assume the same beta, 2 contracts. But if it's $200 stock, you just don't trade, right? And the reason is because market can move 2.5% very quickly. On the $200, if the market moves 2.5%, you're down $500. And $500 is more than 2.5% of $10,000, right? So that's kind of the risk management that I use for my own portfolio, right? I never want to, on the $10,000 portfolio, I buy one contract of $100 stock. 20,000, okay, 2 contracts, one contract of $200 stock I can do. But selecting strike price, selecting number of contracts is extremely important in terms of risk management. And I do mention that in notes. If you look on a stock forecast toolbox, Microsoft had a big rebound. It's good. Off the lows. If you look at the notes, it does explain. So the most important, I mean, I personally sometimes have up to 10 positions because we have different services, different subscription levels, people want different examples. But if you're new to trading, I propose to have no more than 4 positions at a time with maximum loss of 2.5% per account value, right? That's a very important rule, and I encourage you to do it. Here you see example of the model, right? Basically, a model still bullish. I agree with the model. Bulls are still in control, but it does see 451. You probably don't want to chase the market and continue going short, right? If we do drop to 444, which model sees potential, right? It didn't know about earnings from Amazon or Apple. It didn't know about unemployment data, but it basically says, 451. Market is overbought. Maybe it doesn't make sense to chase the market 451, maybe 453. If we drop back to 444, it says consider going buy, right? Long. And I agree with the model, right? I agree with the model. Right now, we're probably trading somewhere between 453 and 444. Any questions? All right, so far QQQ is up 70 basis points on Apple and Amazon, well, mainly Amazon earnings, because Apple, I assume, is still down. Yeah, Apple is still down. People are not stepping, but Amazon continues to trade higher. All right, any questions? Right. So Tim, question, the fast rise in interest rates, that's what caused problem for, Silicon Valley Bank and First Bank. Yes. So higher interest rate is not good for the liabilities part, and that's why they got in trouble. But in terms of revenue, making money, high interest rate, the regular steep curve, yield curve, right? This yield curve is good for the banks, right? Right now we are inverted, right? So every time the short dated options go lower and the longer dated bonds, right? The longer dated bonds go higher and the short dated go lower, the yield, right? This is yield, right? And this is time, right? So the shorter dated time, as long as they're going lower and the longer dated 30-year bonds going higher, that's good for the economy and that's good. But this is, this is good, normal bull market. This is not so normal bull market, right? Or bear market. So this price action is good for the banks to make the revenue, right? But if you have large liabilities like Silver Valley Bank, then higher interest rate is putting burden on your loans on your debt. When in doubt, smaller position size is better. Yes, TJ, I agree. Bob is back, 11:07, 10:07 Chicago time. Welcome back, Bob. All right, any questions? All right, so in terms of stock forecast toolbox, again, 451, I would consider defending your position. 444, I would consider going long. So the model shows you basically a clear picture of what to expect short term. And still uptrend. 6 months, still a strong uptrend, right? If you look at the long period of time, over 6 months, we're definitely in the best 6 months of the historically. So model does show you uptrend. It sees 472 overhead resistance, again 440 support. So when we are at 460, 470, market is overbought. At 440, even longer, they consider going long, right? So probably pull back to 440 and then bounce back. So that's some of the models. We do have PIX services, so we have different models optimized for different time interval. So you can go to Active Trader and it shows you which stocks model sees outperforming the market. So energy, I'm long Schlumberger, Murphy Oil, very strong price action in crude oil, right? You can see crude oil continues to rally. I mean, it's a little bit overbought. It is fighting for year-to-date high, right? Again, make or break scenario, right? Crude oil is trading at the overhead resistance. Model detect that, it detects stocks that potentially can outperform. Industrials, IR, right? Whether it's a Caterpillar, right? If you look at the Caterpillar chart, or you look at Ingersoll Rand chart. Kaiju is here? He's not. You can see a very strong uptrend in terms of industrials, right? And model detects that. AIG as well. So these are short-term trades. The idea, you're looking for 1% move, right? 1% move to the upside, 1% move to the downside. The idea of day trading, you might want to carry this position longer. You might have wider target stop losses. That's all fine and possible, but that's the short-term model. And if you want to do option trades, you can always select options, right? It gives you two choices: either buy at the previous close, right? Buy the previous close, and you just add 40 plus 175, 41.75, or you buy, or predicted low, sorry, or at previous close, which would be 43.30, 43.30. So you always have choice between either weekly or monthly options or stock. And same goes for weekly trader, monthly trader. This is just different models optimized and learning on different time intervals. Learning on different time intervals. Weekly power trader, consumer staples, some of the utilities, and again, some of the energy names. All right, any questions on the models? So you have picks, active trader, weekly trader, monthly trader. You have forecast toolbox. You have seasonal chart, right? The research part. You have probability calculator, which you can look, or you can look at seasonal chart. As long as it loads. Okay. Right, so seasonality, you can see usually August, September, October, you do have a pullback. So that's a lot of bears are even bulls and bears basically pointing that from seasonality point of view, you could have a pullback. Right now we're back to 81% correlation. So pretty high correlation. And you can look at probability calculator, right? A lot of people look at probability calculator. Actually, short-term shows you that it's heading lower, and you can see same thing. 441 is your support, right? For one standard deviation move. 460 is your overhead resistance, and I agree, right? I agree with that assessment. All right, any questions? So those are some of the tools, and in terms of portfolio, I showed you a lead circle. This means you get all the tools, and you also have all of my trades. If you just want stock trades, that's Robo Investor. If you just want option spreads, that's premium portfolio and spread portfolio. So those are your choices, and obviously education is free. We do have a YouTube channel. You can participate live on YouTube. Every Wednesday we have a live trading room, morning session, closing bell session. What else? What else do I want to cover? Well, any questions? If you are looking to for appropriate if you are looking for a subscription, some of you are on monthly, some of you are on lifetime. You could be saving thousands of dollars. If you are considering joining live trading room or for signals, or if you already have a subscription, give us a call. This is the number. His name is Jordan. Give him a call. If you're on monthly and you consider maybe it makes sense for you to do lifetime, you could be saving thousands of dollars. So just wanted to point that out. 312, so I put that number in the chat. You guys, encourage you to call. Even if you're not looking for a subscription, maybe you just want to learn about products, Jordan can help you out with that. All right, any other questions? Let's see where the market is, last 15 minutes. All right, interest rates are continue to drop. Dollar continues to drop. That's bullish for the market. QQQ is trying to retest session high around 377, trying to basically retest Wednesday opening price. All right, any other questions? All right, if there are no questions, then that's all I have for today. Thank you very much. I'll see you at the closing bell or tomorrow or Monday morning. Thank you for participating and have a great day. Yes, so all of the recordings, we record all the sessions. You can find them event recordings, under event recordings. Trading Room and Strategy Roundtable. Thank you, Dilip. Anyone else? All right, guys, thank you very much and have a great weekend.